Hello and welcome to Business Incorporated live on Channels Television. The markets are buzzing. Right now, here's what's coming up. African startup ecosystem is showing resilience. New data reveals startups across the continent secured $1.4 billion in funding in the first half of 2026. Palm oil prices are on the rise. A rally in crude oil driven by renewed tensions between the United States and Iran is boosting demand expectations for the major U.S. banks are unveiling their second quarter results, offering fresh insights into the health of the world's largest economy. It's good to have you join us. I'm Ladi Williams. First off, let's kick off on what's playing out with global commodities at this time. We're seeing oil prices. They're still climbing at this point, 3.57% higher for WTI crude, smashing that $80 level, $80.93 per barrel. Brent crude, that's much higher there, 4.72% higher. Natural gas, 0.31% lower. So we're still seeing energy prices rising, still on the back of what's playing out on the Strait of Hormuz. Flip over to biofuels. Now, we see palm oil prices are rising for a second consecutive session as a sharp rally in crude oil boosts demand prospects for biofuels. Prices in Kuala Lumpur gained as Brent crude surged above $85 a barrel, driven by renewed U.S.-Iran tensions and concerns over oil supplies. That's through the Strait of Hormuz, strengthening the outlook for vegetable oils used in fuel production. So we're seeing that, transcend into palm oil prices and vegetable oil prices. All right, let's look at metals now. We're seeing gold prices that rebounded today after slipping to a two-week low as bargain hunters return to the market ahead of key U.S. inflation data and congressional testimony from Federal Reserve Chair Kevin Walsh. And we see investors also, watching out to what's playing out in the Middle East. Spot gold there, still holding on to the $4,000 level, 0.54% higher. Spot silver, 0.31% at $58.15 per ounce. Remember when this was trading around that $80 level? Half that so far. Palladium, 0.26% higher, $1,250. And we see copper there up 1.56%. So that's the picture right there in the metals market. Let's get a check on other stories now. We've seen African startups. They've raised $1.4 billion in the first half of 2026, but the pace of investment is slowing. As global funding conditions remain tight, and that's according to Africa, the big deal. So we see total funding at $1.4 billion for the first half of 2026. Compare that to the first half of 2025. That's about 6% down. If you compare it to the second half of 2025, coming into 2026, it's a big 22% drop there, comparing both. So this includes equity, funding, debt, grants, excluding exits. Let's look at other parts there of this data. We see for equity funding, that was valued about $900 million. Got a share of about 66%. 7% less if you compare that to 2025 H2 2025, 11% drop. Then for debt funding, $450 million. So we're seeing equity funding outpacing debt funding there with a share of 33%, 66 to 33%, just about 1% higher if you compare that to the first half of 2025. All right, let's look at the countries getting this funding now. Egypt leads with the biggest share, 24%, $327 million. That was what was raised for Benin. That got about 24%. Also, Nigeria comes in third there, 19%, $254 million. Kenya, number 4, 9%, $126 million. That was raised for Kenya and for South Africa. That takes the list there for the top 5. 6%, just $83 million raised by South African startups. So that's the latest data right there for startup funding in Africa. All right, that leads us to our next conversation now. For years, wealth creation, that was associated with the regular market, owning property, building businesses, or simply saving money in the bank. But today's financial landscape is changing rapidly, from equities and fixed income to digital assets, exchange-traded funds, and alternative investments. The roles of building long-term wealth, that's evolving. At the same time, inflation, technology, and shifting global markets are forcing investors to rethink traditional strategies. So What does it really take to build wealth in today's economy, and are Nigerians adapting quickly enough? Joining me for this conversation now is Emmanuel Jago, capital market advocate. Joining me right here via Zoom. Great to have you on the show.
Yeah, thank you so much, Larry. Thanks for having me here.
Fantastic. Here. All right, I'm sure you followed the last data there from Africa the Big Deal, looking at startup funding, seeing Egypt leading, raising about $1.4 billion in the first half of 2026. How do you see the data?
Well, the data is great. It basically shows that the startup ecosystem is still resilient. And even though the numbers are great, but the issue is not just about the number, just as you showed in your data, it's the drop in the numbers, right? You could see that prior to now, in May, the data was really slow. Africa had already raised about 800 and something, which was about 20% lower than H1 2025. But then right now, we have noticed that, okay, these other companies, Flutterwave and then the Coastal raised some more money, and that took it to 1.4 billion. But then when you look at the numbers and you compare it to the amount of deal flows, you would realize that even though we raised more money, the deal flow reduced from about 250 to about less than 150. And that's primarily because investors are now more focused on not just narrative or storytelling raised by founders that were getting equity in like 2 years before now, but they are more focused on founders that have been able to prove themselves. So it's now a build, prove yourself, then raise. So the number of deal flows reduced, even though the number of money that was being raised increased over time. And when you look at the data set, taking it 100% notch, you would find out that about a quarter of that money was basically being raised by just two different companies, Spiros and Flutterwave.
Right. All right. Definitely we keep tracking, the funding, comparing it to, the previous year. And, we've seen a trend, a steady trend, though, with, some of the funding, coming in between first half of 2026 and first half of 2025. Let's flip over now to, the new rules of wealth creation, at this point. In your mind, what has fundamentally changed so far when you compare, wealth creation now to about 10 years ago? Do you think we're still in the same, path?
Yeah, so if you took the data about 10 years ago, Nigerians were mostly interested in real estate. Real estate was the primary and still one of the primary indicators of interest for Nigerians when it comes to investing. But due to the democratization of the capital markets and the whole cross-border analysis and investment thing, it has become a bit more open, and people are now becoming more aware of the fact that they can actually build wealth not just from the real estate market, but from the capital market. So people can now invest in, debt instruments, can now buy equities in companies, and they can basically get dividends, and they can basically use that to plan their retirement or whatever. But prior to now, the narrative has been, when you start making money, build a house, and then leave the house for rental, do commercial real estate. But right now, it's a mixture of real estate. It's a mixture of personal branding, digitization of your products and your experience, and also the whole idea of being able to invest in equities, bonds, and then stocks and the likes. And that's basically been the narrative right now.
All right. Which asset classes would you say are most attractive right now?
Could you come again?
Which asset classes are most attractive right now in your mind?
Are more distractive.
Asset classes are more attractive.
Okay.
Yeah. Which ones do you think should be getting attention now?
Yeah. Okay. Well, for now, I think the equity-based investments should be getting a lot of attention right now, because the Nigerian market, in terms of performance, the capital market in Nigeria has performed really well over the last 2 to 3 years, which is a strong indicator that the next 5 to 10 years is actually going to be an upward trajectory based on the infusion, the democratization, and the increased participation of both local and international participants. And also, this is basically, so in terms of GDP also, we've basically shown like a very, very strong growth. So in terms of where it's actually going to be much more interesting and much more attractive, the equity market is actually like a very, very strong point for me in terms of argument, yeah.
All right, definitely. We'll keep tracking, how some of these billionaires are making money now, but some still seem to be making money the same way in the past 10 years, but we'll keep tracking them. Thank you so much. That was Emmanuel Jago, capital market advocate. Thanks so much for coming on the show today.
Thank you for having me, Lan.
All right, let's get to check on other stories now. Ethiopia's central bank, they've raised their benchmark interest rate for the first time since adopting its current monetary framework as policymakers respond to renewed inflationary pressures driven by higher global oil prices, and the National Bank of Ethiopia said to increase their policy rate to 16% from 15%, while also removing limits on bank credit growth, signaling a tougher stance to contain inflation and support macroeconomic stability in one of Africa's fastest growing economies. Well, let's flip over to the commodities market now. See, animal feed is the backbone of livestock production, but soaring input costs are making poultry, eggs, beef and dairy increasingly expensive for consumers. As feed prices continue to climb and insecurity threatens agricultural output, what does this mean for food security, inflation, and Nigeria's position as West Africa's leading livestock feed producer? Joining me now, we have Ayobami Olatunji, analyst, financial derivatives company. Great to have you on the show.
Thank you so much for having me.
Yeah, so we see the average price of a 25 kg bag of animal feed that has surged nearly 57% annually over the past 3 years. And we've heard it's largely due to rising cost of grains and other key inputs. But are there other drivers here?
Yes. Okay, so yes, it is true that the price of livestock feed has increased by 57% annually over the past 3 years. And this can be attributed to several factors, including the input costs. So livestock feed is, a combination of certain inputs like maize, sorghum, soya beans, rice, and these are produced in key producing areas such as the Middle Belt, the northern region, and these areas are faced with, insecurity, right? And because of this, farmers have abandoned their farmlands, and we see like reduced farming activity for some of these products, reducing their supply and, increasing their prices. So with increased input costs, we see an upward trajectory for the price of livestock feed. And combined with the rise of, energy prices, oil prices, that has increased the cost of producing animal feed and then transporting these products. So combined together, these things increase the cost of producing livestock feed. Not only that, it increases the cost of producing our proteins, which are really essential for health, education, and human capital development. And consumers are faced with higher prices as a result.
All right, and we know Nigeria accounts for about 76% of livestock feed production. That's for West Africa, but it looks like insecurity is continuing to disrupt that.
Yes. So, in key producing nations, key producing areas for the inputs of these livestock feed, right? We see persistent insecurity, and because of this, that has explained the sustained increase in the price of livestock feed. And we will continue to expect that livestock feed increases if this continues. And it has also affected Nigeria's ability to benefit from the fact that it's the largest producer of livestock feed. And if this continues, we can expect to see reduced confidence, lower investments in these sectors because of the insecurity. But if perhaps the insecurity ceases, right, and we see a downward trend with the oil prices, then we can expect to see a reduced price for livestock feed.
All right, I mean, thank you so much. We'll definitely keep tracking all of those prices. Thank you.
Thank you so much for having me.
All right, let's flip over to the markets now. See, for the African continent there, the NGX now is trading flat. Was trading flat at intraday, and other markets on the continent there. Flip over to, there you have it. Johannesburg Stock Exchange, 109,000, losing 110,000 level. Let's flip over to other parts quickly now. EGX 30, 0.68% down, but the Nairobi Stock Exchange managed to close strongly in the green, 1.51%. And for the Dubai Index, it's big drops there, 1.47%, 0.54% lower in the UAE. Other parts, Tadawul, 0.74% down. Qatari Index, not still closed, just like yesterday. Let's move over to Asia markets now. Firmly in the green to close. Kospi 0.73% higher, 0.25% for the Hang Seng index there. And flip over to other parts now. Shanghai Composite 1.36% higher than in India. The Nifty 50 there, that's a laggard, 0.66% lower, 24,052 points. Flip over to the U.S. now. We see the stock futures were quite mixed as traders are weighing a slew of corporate earnings, releases, and rising oil prices while awaiting release of key inflation data. But yeah, we did see the big banks are rolling out their earnings so far. The likes of JP Morgan Chase there, we see earnings per share that rose, actual $7.70, expected was $5.85. So they beat expectations there. Revenue $58.02 billion. That was the highest revenue there. Beating market expectations of 50.19. Let's flip over to other top banks that also released their earnings today. Bank of America, there you have it. Earnings per share expected was $1.13. They beat that by $1.21. Revenue $31.7 billion. Not a big beat, but they beat it. They beat expectations about $30.72 billion dollars, and we see Wells Fargo there coming in. So it's been fantastic earnings so far for the biggest banks in America. Earnings per share there was $2. Revenue $22.62 billion dollars, beating the $21.84 billion dollar expectation right there. So those are the major banks we're tracking. More still rolling. I think about 5 banks have released their earnings so far. That's for Q2. 2026. Let's flip over to Europe now. Let's see what's happening there. I have Lars Holter over in Berlin. Great to have you, Lars. How's it looking there?
Yeah, good to be with you, Ladi. And you see it there in the U.S., the bank always wins. I guess that's your lesson for the day here in Europe. Markets are actually down today, and it is all due, of course, to this general situation the world's finding itself in, namely the situation in the Gulf region, where a growing number of analysts and investors all across Europe also seem to think that a quick end to the conflict can't really be expected anymore. We have the oil price higher once again. We got U.S. President Trump now talking about a toll that he wants to raise for transiting the Strait of Hormuz. Another nightmare scenario, of course, for global trade. So there's lots of bad news. Markets are down, and I guess that makes sense.
Right. I guess it makes sense. At this point, we keep tracking those U.S. bank earnings, but we see high energy prices. They've been one reason the German economy has been weak for the past few years. Now, the country is planning to, widen its network of suppliers, having talks with the likes of the Algerian government. What can you tell us about, the talks between Germany and Algeria?
Yeah, Lali, these talks aim to intensify a trade and energy relationship that does in fact already exist. Algeria has been supplying Germany with liquefied natural gas for years, but in light of currently really depleted gas storage levels, Berlin wants to buy more. Now, for some context, ever since Germany lost its supply of cheap Russian gas due to that country's war in Ukraine, of course, we've built up a network of new suppliers, with the US being the biggest, but followed then by Algeria. And as for future increases here, another issue takes center stage. Doing the extraction and transport and processing of gas, large quantities of methane escape, and methane is many times more damaging to the climate than carbon dioxide is. So in an effort to clean this up, Germany wants to actually assist Algeria in reducing the leakage of methane across the production value chain. Now, there are 2 ministers in the German government who look at this whole issue from 2 very different points of view. The environment minister is advocating for stricter methane regulation across the EU, as is actually currently planned by the bloc, while the Minister for Economic Affairs says that would make things a lot worse for the economy. She aims to have the tightening of EU regulations postponed. The argument being, of course, that by tightening the methane regulation as planned, the EU might be unnecessarily cutting itself off a large share of the global oil and gas supply.
So what will the EU do to solve this conundrum?
Now, that's really hard to say right now because the EU is taking environmental standards extremely seriously, and for good reason, as the current heat wave across Europe clearly shows. It clearly shows us the extent of damages from climate change. At the same time, gas storage levels across the continent have dropped alarmingly due to the long winter we had, and they're refilling now only very slowly. The German gas industry, in fact, is concerned with companies. They're saying that while they generally support tougher standards, they're actually afraid of an energy crisis if the EU tightens too soon. Some are afraid that LNG suppliers would rather deliver to non-EU countries in future if the bloc's regulations put too much pressure on them and, of course, their profits. So the EU has to find a way now to balance the urgent needs of the economy with a just as important goal of protecting the planet from even more methane emissions.
All right, Lars, before I let you go, how's the weather over in Europe today? Is it better?
It's actually going to rain today and hopefully wash a little bit away, but the heat wave is continuing, especially in the south. So we're trying our best to keep cool.
All right. Thank you so much, Lars, and hopefully it gets cooler over there. Thank you.
Thank you, Larry.
All right, let's get a check on what's playing out in the crypto market there. I'm seeing mostly green on the screen. So far now, with Bitcoin trying to recover some ground, 1.78%. It was looking like it was going to lose that 60K level, but it's back up now. Ethereum, 4.19%, back to the $1,846 level, and you see a few pockets of red there with the likes of TON, but most of the stable coins, I guess investors moving out of those ones there, they're back in red so far. Let's look at some headlines there. Cryptocurrency exchange Kraken, they're launching a new crypto debit card, allowing customers to spend digital assets directly at millions of merchants worldwide. The card, developed in partnership with MasterCard, supports crypto and stablecoin payments while automatically converting digital assets into local currencies at the point of sale. The launch marks Kraken's latest push to expand everyday use of cryptocurrencies beyond trading and investing. South Korea is targeting 2027 to launch a pilot linking tokenized government bonds to its wholesale central bank digital currency platform. The initiative, unveiled at the government's 2026 economic strategy, aims to modernize capital markets using blockchain technology. Authorities also plan to make the Bank of Korea's CBDC infrastructure compatible with external blockchain networks to improve interoperability and digital assets settlement. Then in the U.S., President Donald Trump is urging the Senate to swiftly pass the Clarity Act without adding ethics-related provisions, arguing that amendments could delay long-awaited cryptocurrency market reforms. The legislation seeks to establish a clearer regulatory framework for digital assets by defining the roles of most of these platforms. They're a move that's supposed to put a greater clarity and certainty for investors and the crypto industry going forward. So definitely we're still seeing a lot of improvement when it comes to U.S. regulation and digital assets. But the markets are still buzzing right now. We're still expecting more earnings from most of those big banks in America, and definitely investors are reacting so far. We're seeing the markets react. We'll see what happens at a close. Thanks for watching Business Incorporated today. I'm Ladi Williams from the team right here at Channels HQs. Bye for now.